Is the cheapest interest rate always the best buy-to-let mortgage? Here are some tips and tricks to consider when choosing your next buy-to-let mortgage. Many people find mortgage best buy tables and the information given by vendors a little bit confusing. And quite often the deals are structured by loan to value. So you could have a table of deals that says loan to value, X deals available. This set of slides is designed to give you some tips or some pointers when trying to evaluate the different sets of numbers that are presented to you. So I'm going to start with my typical property A. It costs £200,000, deposit £20,000, mortgage, current mortgage £180,000. This is capital outstanding. Market value £250,000, current mortgage 3.5% annual percentage rate, and this is fixed for the duration of the loan. The owner of property A is being offered 4 potential new mortgages or loans, and these are listed on the screen, and they range from lender A at 85% loan to value down to lender D at 70%, and they all carry different APRs, different terms, and different product fees. Now, which one of these potentially is a better deal than the deal that the owner currently has? It is not as straightforward as you might think. It's not the lowest interest rate, potentially. Let's have a look. So the current loan to value is calculated by this formula, and therefore if we calculate that 180,000 divided by 250,000, which is the current market value, gives us a loan to value of 72%. This automatically knocks one of the loans out. So as we can see from the previous set of slides, lender D will only entertain a loan where the loan to value is 70% or lower. And as we can see, we have a loan to value of 72%. So lender D automatically falls out of this calculation. However, if we reduce the borrowing from 180,000 to 175,000 by the addition of a further 5,000 deposit, lender D could be considered, but we'll consider that in a minute. So to calculate the simple mortgage payments, and I'm assuming this is interest only, we use a very simple calculation. Outstanding capital, 180,000, times by the annual percentage rate, divided by 12 to get a monthly payment. So for the current mortgage for property A, 180,000 times 3.5% divided by 12 gives us a monthly payment of £525. Now, which of the loans that we're going to look at gives us a better deal? So if we look at lender A, using the same calculation with the APR that lender A is quoting, we get a monthly payment of £487.50. Lender B will give us a monthly payment of £450, and lender C will give us a monthly payment of £382.50. If you were to purely go on the annual percentage rates, at this point you would pick lender C. Is lender C the right lender to pick? Well, let's look at all the costs of securing this borrowing. Along the top here you can see the cost of the monthly cost of the new loan, which we just saw how I calculated that. Then we can see the cost of the original loan, and we have a potential saving per month ranging from lender A at £37.50 to lender C at £142.50. Again, at this point you're sitting there thinking, well, lender C is the right lender. However, let's think about the other terms of the deal. The first thing we have to consider is how long is the deal. Lender A gives us 5 years or 60 months, lender B gives us 3 years or 36 months, and lender C gives us 5 years or 60 months. So if we times the potential monthly saving by the term of the deal, we actually end up with a term saving, if you like. So over the term of the deal, lender A will save us £2,250. Lender B will save us £2,700, and lender C will save us £8,550 over the term of the deal that they are offering. And this is just an interest saving. The next thing we have to consider is how much did it cost us to actually secure this deal. So there was zero application fee from lender A, there was a £500 application fee from lender B, and a £1,200 application fee from lender C. If we then take those numbers into account, we can see that actually, even though on a monthly basis lender B was cheaper, actually lender A at a higher interest rate is a better deal, potentially. However, if we then look at lender C, who charged a much bigger application fee, we can still see that over the term of the deal, lender C is a better deal for the owner of property A. And these are all high level figures, but just giving you some tips. If we assume that the lender was prepared to put a further £5,000 in, and lender D came to the table, and we recalculate these figures based on an outstanding capital payment of £175,000 as opposed to £180,000, which we see in this table, we see some more numbers, but we see a fourth row here for lender D. Now again, if you took the potential monthly savings, you would automatically here home in on lender D, which is saving us £182.29 per month. However, if we then take in the term of the deal, lender D is only 36 months against lender C, who is 60 months, we can see that automatically the saving in interest over the term of the deal, lender C is a better deal because it fixes our interest rate for a much longer period of time than lender D is. If we then put the application fee on top of that, we can see that lender A is actually a better deal, even though it's a higher interest rate than lender B, and lender C is a much better deal than lender D at a lower interest rate, and in actual fact is the better deal than lender A. So even though lender D in terms of interest rate may look the better deal, the higher interest rate is actually the better deal for us, because when you roll all the fees in, it actually works out cheaper over the term of the deal. Hopefully that has given you some pointers when trying to assess loan to value rates, new mortgage application fees, and interest rates for new products. The contents of the video you've just watched does not constitute advice. It's my opinion and my reading of the subject matter that I've been discussing. If you like what you heard, of course, feel free to subscribe. Somewhere, either here or here, will be a subscription button. Click the subscription button and you'll be notified when videos are posted to the channel. Somewhere here or here will also be recent videos from the channel and maybe other videos relating to this subject matter. I look forward to you subscribing and joining me on my journey and your journey as an accidental landlord.